The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Mark with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida, and he's nice enough to come on and talk about what's happening in the world of commodities. Shawn, how are you doing this morning?
Doing really good, Casey. Really good.
Good. Well, before we start talking, we got a late-breaking story here about the Prime Minister of India. Looks like he may not get reelected, and that's kind of a big deal for Indian policy as far as how things move forward, because really it's like the lamest of lame ducks right now, I guess, when you start looking at the next quote-unquote Prime Minister comes into play.
Well, everyone thought, everyone knew there'd be political chaos in the U.S., political chaos in Europe, political chaos in Africa. Everyone thought India was a sure thing. And now it looks like we're going to have political chaos in India. And so the $1 trillion question is, what motivated these across-the-board ag export bans? Was it politically motivated ahead of the elections? Was it economically motivated, supply demand? Was it, and so if in fact he doesn't get in and loses and the new administration comes in who have different views, it'll be very interesting to see if they maintain those policies or if they loosen those policies for a little while. But for right now, I mean, I think you have to view India as an open, as a free for all right now until we know more about what exactly is going to happen, how the government's going to form, and what their mandates are going to be. And so things like rice and sugar and recently they said they were going to import wheat. I think we just have to take a step back. It doesn't mean those policies will change, but it doesn't mean they won't change. And right now, I think one has to be a little careful to manage risk in case they turn tail for a little while. Whether they should or not, by the way, they may just turn tail for a while just because that's just what they feel their mandate is. And if they did turn tail for just a little while and they started exporting these markets again, it could impose some pressure for a little while. I'm not, no one knows what's going to happen. I want to be very clear. I'm not saying anyone has any idea other than we were certain before they were going to stay in. Now we're not so sure. And I think if you're a producer in these markets, especially out in Asia, and you're sitting there wondering whether you should make some sales, or protect some downside price risks, this would be a time to make sure you don't get caught with a short-term, black swan event. Whoever the new leader is says, yeah, we're going to start exporting everything again for a little while. Just need to be careful because that has been a huge bullish driver for these markets for a while. So
as you look at that marketplace and you're seeing what they have for stocks, what is your reaction to this the stock situation in India versus some of these policies that are there now? And do you think maybe that was more than just a political move? Are the stocks in a situation such that they would have to draw back on their export?
My view, based upon supply and demand and based upon economics, is that they needed to hold back exports. They needed, the internal prices were very, very high, have been very, very high because they have too much demand domestically. Their demographics are phenomenal, and they've had some unfavorable crops the last few years. So I believe it was justified. It doesn't mean, but remember, there's the political decision and there's the economic decision. Politically, despite that, they may still say we're going to export ag products again, despite it all. Which, by the way, makes things even worse later. Like it makes it even worse later for higher prices. But politically, whoever gets in, if that happens, may decide they want to turn tail for a political reason, not for a economic reason. And that's the thing that you always have to know with politics. Politics is not always what's right; it's what's political.
Oh, come on, John. Wow.
No, but I
told you that.
I believe, and I have been stating for quite some time that I believe, they are transitioning from an exporting economy to an importing economy.
Right.
And I believe wholeheartedly that's happening, should be happening, and will continue to happen. I'm just talking about a short-term political shift in policy for maybe 3 to 6 months that could cause some extra supply to come on the market that could depress some of these markets that they're involved in before they have to go back to that policy, realizing that they made a terrible mistake doing that, and then the market takes off again. Mm-hmm. So there's the short-term picture, and there's a long-term picture. But farmers have to survive the short term. If they don't survive the short term, there is no long term for them. Meaning, if they can't survive a hole in prices, and they go out of business, then there's no long term for them. So all I'm trying to say is, make sure you manage your downside. Especially if you're an Indian producer or you're a Chinese producer of cotton or sugar, or just be careful. Be very, very careful. Something like this. I would say protect your downside first. Ask questions later. You're always going to have more production to sell later. Always, you're a farmer. You always will have more to sell later. Always. You're never going to have a shortage of stuff to sell, but you're never going to get another chance to sell something if it falls for a while. I mean, you don't get that opportunity back. And farmers are notorious for selling after a market has fallen a lot, and they're looking at their losses, and the bankers are hounding them and saying, you got to sell. And now they're selling prices that make no sense to them, but they don't have a choice. At this point, we're in a situation where you can take action without putting yourself in that position. Maybe nothing happens. And if nothing happens, then you're still selling prices that probably work for you. And you have more to sell if prices stay firm. But if we do get a new guy who comes in a few weeks from now, or woman comes in a few weeks from now, and all of a sudden says, yeah, we're going to export the shit out of everything, I just wouldn't want to be a producer trying to sell in that environment. The stock market in India, is got really hit very, very hard on this. Obviously, it's throwing the country into a massive moment of uncertainty. Just be careful. Just be careful if you're someone that produces in India, or you're someone that is relying upon India prices. Just be careful right now. It's a very murky period, and you have to understand what you can't know. And right now, nobody knows anything other than Modi was a sure thing, and now he's not. That's what we know.
Right. All right. We got a lot of moving parts once again in the world, Shawn, and there's going to be plenty of stuff to pay attention to here. Let's take a look at the wheat market real quick. So the wheat market has really backed off from some of the highs that we've seen here. I think this morning it opened up under $7, if I remember correct, which is down 15 or 20 cents from where it was a day or two ago. So, Shawn, as you're taking a look at this, you talked a little bit about this on your market-to-market appearance, and also in your latest newsletter that you sent out. But talk a little bit about what you see happening in the wheat market and what some of the drawbacks.
Once again, like India, there's the long-term picture where we have a major crop problem in Russia that's not getting any better. It's not going to get better, according to us. The short-term issue is the U.S. has the largest wheat crop in at least 4 or 5 years. Prices are up substantially from where they were a few months ago. Farmers are profitable. Harvest is about to start. They are going to sell. Harvest pressure. I mean, this is, very, very rarely will markets go against early harvest pressure in any market when, whether it's September for corn, October for soybeans. I mean, June for coffee, Brazilian harvest. I mean, whenever, it doesn't mean it can't go against it, but it's very unusual for the market to go against early harvest pressure, especially, if you're having a more sizable crop like the U.S. has had, and you've had a big run up in advance. It's just setting up for a short-term effect. Does that mean the upside is over? No. Does that mean that the top is it for the year? I don't believe that's the case. It just means a top has been made. And we were, as you know, Casey, we were advocating making cash sales into this rally for this very exact reason. We've been promoting through the whole month of May, making cash sales, because we felt, that there would be some kind of a setback in June based upon, on top of it, June and soybeans get finished planting. Everything looks great in the mid-June. It's a tough period, first half of June, to rally the grain markets in general. And now we're seeing soybeans and corn backing off, and it just sucks the wind out of wheat even more. It's just a seasonality issue more than anything else, Casey. On top of it, look, we can debate all we want, but we have, the crop is pretty good overall compared to the last 3 or 4 years where it was, just horrific. It's a decent crop, and it's a good thing. We have higher prices, a decent crop. Farmers are actually wheat farmers are, if they took advantage of making those cash sales in May, are going to do very, very well after looking like they were all going to go out of business just a couple of months ago. So,
yeah. It's a tight market here. So, Shawn, let's talk about something. I know monetary policy is not necessarily something that's that you talk a lot about, but I just wanted to get your reaction to something here. So I read a couple articles yesterday, one out of Burns, and I think the other one was New York Times, I can't remember what, but basically it was the reason why the Fed's not going to raise or lower rates in 2024, and take a look at in 2025, it's possible any kind of rate reduction coming. Still talking about inflation, so on and so forth. I guess, Shawn, as you look at that, any surprise? I mean, surprised a little bit because what they said at the beginning of the year, but now this year, I guess, as you look at how the inflationary talk and interest rate talk, stuff like that, it's transition where we're at now. Are you surprised by any of this? And does any of this, strike you as maybe more political than
The
politically
Fed has
driven than
never
other.
moved in the past without getting punched in the privates. I mean, they moved in 08 because the system crashed. They moved when September 11 happened because it threw the economy into recession. They moved during COVID because we shut the economy down. They moved in 1987 because we had the stock market crash. I mean, they move when they get punched in the privates. I mean, they will not move until they're never going to be proactive in preventing some kind of a negative market reaction. So, and what happens is the market at the beginning of the year all said, oh yeah, all kinds of rate cuts, here it comes. They're all wrong. Now they're saying no rate cuts. They're all wrong. These consensus, they have no clue what they're talking about. They never get it right, ever. We're going to lower rates substantially between here and the election. No doubt in my mind that we're going to see that. The economic numbers we've been seeing lately are catastrophically bad. Commodities in the last week, they've gotten hit extremely hard. The most important commodity, crude oil, which is really the driver of overall inflation because crude oil and energy is involved in just about everything we consume, is getting crushed. We were at 88, 89, 90. Now we're struggling to stay above 75. So inflation is going to crash. And now we're seeing that banking losses are escalating again. They're going to move because the economy is going to force them to do it. I mean, and the political pressure. Nobody in power wants to be put on the election ballot with an economy in crash mode. How do you say vote for me when the economy is crashing, everything's falling a hell in a handbasket, everyone's losing their job? Yeah, I did a great job. I mean, it doesn't really work very well. So, and for better or for worse, there is no independence, in my opinion, to the Federal Reserve. That is just a lie. They are there. The chairman is there at the pleasure of the president. It can be taken away at the pleasure of the president. It's a political organization, and they don't know who's going to get in. My suspicion is they would rather have the current administration than the Trump administration because of how Trump treated them last time, which I don't think they enjoyed so much. So I don't think they're going to be cavalier about risking losing their jobs because they want to, keep monetary policy tighter for longer. I think there's plenty of justification that I've seen, both in commodity prices and energy prices and in some of these really catastrophically awful economic numbers we've been seeing lately, to give them cover to say, we're going to start lowering rates. I just think it's just clear as day. And given that nobody thinks it's going to happen, is exactly now when it's going to happen, when no one thinks it's going to happen. The market is always on the opposite side of the boat with these things. It's just, I mean, I don't know why that is. You'd think that the market would eventually figure out that they should be acting differently, but they always seem to get conned into to the wrong side of the boat every single time when it comes to monetary policy. So I would be very, very surprised if we didn't see a rate cut by the July meeting. I'd be very, very surprised. Very, very surprised.
Yep. I'm kind of still in the same way as you are. I look at like what you just said, that there's plenty of reason out there for rates to start moving. If you look at what they're based on, what they're making in quarter, which never changed.
And we've had a major risk off trade here in the last week. We haven't seen a risk off trade like this in quite a while, Casey. Risk off trades just don't happen because capital has nothing better to do. Risk off trade happens when the market capital is worried about economic activity going forward. So we saw the dollar go down, we saw the bonds go up, commodities get hit, AI stocks, the darlings, get completely destroyed. That isn't that just doesn't happen because everything's looking great up ahead. It's telling you that in the mind of the capital, in aggregate, who look at all this stuff, they see some big problems economically ahead, and they're getting the hell out. I mean, let's just put it for what it is. The market action tells you what's likely going to happen here. The Fed reacts to the market. Fed doesn't react ahead of the market. It reacts after the market. Now, it doesn't mean we're quite there yet. As I stated in my report on Sunday, and as I stated on Market to Market on Friday, these things have to play themselves out. I think this risk-off trade can last probably in the mid-late June and get substantially uglier than it is. But it's the ingredients to force the Fed into, or it gives them the cover to start lowering rates ahead of the elections, because whether they like the Biden administration or not, they love them a lot more than they do the Trump administration, because they've dealt with both of them. And I can't imagine the way they are that they want to go back to the Trump administration and having somebody tweet, that the chairman is a complete idiot and he should be removed, which is what Trump did repeatedly. I'm not saying Trump was wrong or right or indifferent. I'm just saying I don't think they like that, and I think they'll do everything they can to avoid it. So,
all right, Shawn, good place to stop. Folks can reach out to you, get more information about what you're doing over.
We have a lot of stuff we put out on our Twitter page at Faradex11. We have a LinkedIn page. We also put out some stuff. We have a website, Hackett, Hackett, advisors.com. We're not habitual daily, junkies. We're always putting stuff out. And once in a while, we put some stuff that we think is pertinent. Try to keep you abreast of what we're thinking about and to see how we look at the world in agriculture with our cycle statistics correlations might be of some value to those watching your show. Thanks, Casey. Always a blast.
Appreciate you being on the podcast, man. Casey Seymour, Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Go to the video version at the YouTube channel, which is Moving Iron Podcast YouTube channel. And while you still can, go to TikTok, and you can see what we have up there as well. Go to MovingIronLLC.com for everything Moving Iron related, and Moving Iron related, and you can see the information for Moving Iron Summit to get signed up there. So with that, I'm Casey Seymour with Shawn Hackett. Let's go some iron, folks. Out.
The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time